People there already. We are live, and what we're going to do, folks out there, we're just going to let a few of you kind of load up, and then we'll kick off the evening's event or morning event, wherever you might be in this world. There we go. We got 14 minutes so far. As you come on, just say hi in the chat box if you'd like as well. I'd like to see who's listening in. It'd be cool. Were we going to do a poll, Debbie, as well?
Yeah, throughout the course of the conversation, we'll post a couple of polls too.
Okay, all right. Debbie's there. I'm there. Kirstin's there. Us talking to ourselves. We got Carlo. Carlo's looking forward to this one. That's cool. Thank you for listening in, Carlo. Okay. Sometimes a little bit of a lag. It's actually only 1 minute past 6. So anyone loading on now, we're just waiting until we get a few more people on board, and then we're going to kick it off in a little while. We need some nice classical music, I think. Okay. Might just give it 1 more minute. Because last time we did this, actually, a bunch of people came in last minute, which is often the way. But anyways, everybody, welcome to Defrost number 60, our webinar on our sustainability series. It's the third and final part. Not that it's the end of sustainability, but we have to keep going. But it's the third installment of our 3-part series. What we're going to be talking today about is money talk, the power of brands, individuals, and enterprise in a sustainable ecosystem. First of all, I just want to do acknowledgement of the country. I'd like to begin by acknowledging the traditional custodians, both past and present, of the lands on which we live and work today. I have a special guest tonight, Kirstin Hunter, co-founder and MD from Future Super, Chris Selth, founder and CEO of Nexus Initiative, and the wonderful Debbie Spence from Frost Collective. So welcome, everybody.
Thanks, Vince. Great to be here.
Thank you.
Thanks for having us.
Exciting.
So nice to see you all there tonight. What we're going to do is that we're going to kick it off. Debbie's going to do an intro to Chris, and I'll follow that with an intro to Kirstin.
Yeah, welcome, Chris. Great to have you here. So Chris Selth, everybody, is a founder and CEO of Nexus Initiative. He's an award-winning fund manager and economist. Also, he's been described many times as a Marxist investment banker. Chris, he believes the way to maximize economic and human value is through people working within sustainable systems. And we're really excited to hear his thoughts and insights today. There's a core belief that continues to underpin his career, that commenced as an analyst at Bankers Trust. He rose then to the head of international equities at the firm. And the Nexus Initiative, so Chris's company, is the outcome of his policy and long-standing belief in human empowerment as a driver of not only financial and social wealth, but also well-being. So welcome, Chris.
Thank you.
Yeah, welcome, Chris. Great to have you on board.
Very much appreciated.
Kirstin Hunter is the co-founder and MD of Future Super, where she's leading the movement to use the power of money to invest, advocate, and campaign for a future worth retiring into. Kirstin began her career as a solicitor at Freehills before moving to Bain & Company, where she specialized in financial services strategy, working for clients in banking, insurance, and wealth management in Australia and in Canada. She has done pro bono work for nonprofits, including the Aboriginal Trust Fund Remuneration Scheme, Oz Harvest, White Lion, and chaired the board of the Youth Food Movement Australia, and found Aussie Body Wearers for refugees. Welcome, Kirstin.
Thank you.
That's a very impressive CV.
Thank you.
So what we're going to do, folks, is we're going to kick it off. Debbie is going to ask the first question. As I said earlier, we're going to alternate as we go. What we'd like you to do is play a part in this as well. So in the chat box, please feel free to add any questions as they come. And what we'll do over the course of the hour that we have, we'll pull out some of the questions as we go, which is always adds a real nice bonus to the whole evening. So away we go.
Yeah, both of you have got fascinating backgrounds, and we'd love to find out a little bit more about you and your journey. So what's brought you to your role today? We'll kick off with you first, Kirstin. Could you give us a potted history of your career and the highlights on your journey that's brought you to your role today?
Yeah, absolutely. I mean, I think as you've all just heard, my background is in corporate professional services, first as a lawyer and then as a management consultant. But I think the thing that maybe is a little bit more unusual about my time in those roles is that I've always been someone who's been really motivated by seeing how the skills that I'm learning in the corporate side can be put to work for the community side. So that's what's driven a lot of my involvement in pro bono across both of those roles, as well as my volunteering work outside. For me, that kind of two-track career started to unravel a little bit once I had my baby, because I just wasn't able to put in the time to volunteering that I had been able to earlier in my career. And what I found was that just sort of led to a bit of a decline in my energy for the corporate work, and just left me feeling like there was something missing in what I was doing. At the same time, sitting up with a newborn meant that I had lots of time to read horrific things about climate change and the forecasts that were being expected, and then sort of doing the very basic maths on this little tiny human and thinking she's going to be in her mid-20s in 2040 by the time all these things are happening. And that was a big wake-up call for me, that I don't want to be spending my working life, my time away from her, doing something that isn't contributing to making that a better outcome for her once she's old enough to, to be having the same kind of opportunities that I was having. So at around the same time, I started looking for, actually at around the same time I heard about Future Super, and I just loved the idea. It was a superannuation fund, which I've always been interested in superannuation from an ethical perspective since another super fund launched a couple of years earlier, looking to use superannuation to drive ethical outcomes. And to me, it just makes so much sense, because superannuation is such a long-term investment. We're managing money for people's retirement. And so, of course, the world that they're going to retire into matters just as much as the money that they're going to have in their account to spend. So I got an introduction to the two original co-founders at Future Super, started doing some casual work. A couple of months later, came across on a short-term contract, and then a month or so later, we converted to permanent. And that was now 3.5 years ago. And in that time, the fund has gone from managing around $200 million to managing $1 billion in superannuation assets and advising on almost $2 billion more outside of that. We've grown the membership from around 6,000 to around 30,000. And the last 9 months have been successively the biggest quarters in growth that we've had at Future Super. So the business is growing incredibly well, and it seems like the time is right to be talking about ethical investing.
Congratulations. So you can track the growth of Future Super right back to the date you started, right? You just saw it in the boom.
Well, I do like to tell them that, but yeah.
Brilliant. And what about you, Chris? Could you give us a potted history of your career so far?
It's a bit spooky. I came from a Adams family, refugee, crazy background, where I knew that life was a bit uncertain. So when you come from a refugee family background, that's a whole story unto itself. I was interested in people, and I knew that I had to support myself and do something with people. I went in economics and law and so forth because I was interested in people, not money. I bizarrely ended up in the honours year working in finance, doing finance, because I thought I needed to use one practical subject. And because I wrote a paper that was all people focused, I got the university medal in finance. I mean, the reason why I say that, it was bizarre because I was not a money person. I was a people person. And I suddenly found myself with this piece of paper, which got me into finance. And I worked at BT. which, you know, at its foundational stage. And what was very interesting at that point in time was that I was trained by a guy called Kerr Nielsen, who you might know, runs Platinum. He's, you know, a deity. And it was an extraordinary experience because it was about a time about value, what's termed value investing. And what value investing meant at that point in time was buying cheap, low value, you know, cheap companies. That was value. But in the 90s, we had a shift that took place. As we got data, we understand that value was sustainable value creation over time. You know, values created rather than cheapness. And that was a morphing that took place, and it coincided. And I think because I had a people perspective and a values perspective, I was blessed. It gave me a unique perspective. We performed really well. And that's, in the end, I ended up running their international business. But it was always about value investing, which is now morphed into this thing. What is sustainable? And it's a huge discovery in the market, but it's actually an old idea that things which create value sustainably over time are worth more. And so the idea that values and sustainability are antithetical to money making is false. And so I left BT and I wanted to go and study wisdom at INSEAD. And somebody said to me, climate change, you're a really great investor. And I set up an ESG fund called Five Oceans. We did very well. It's another long story. It was an early stage ESG fund about this value proposition. We won awards, yada, 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 all that kind of stuff. But it was because we were interested not in money, but in people and values and outcomes. And that allowed us to make better investment decisions. It's bizarre because if you look at the financial press, in the last 12 months, this is now understood by everybody. We've been doing it like 30 years. The idea that if you understand real value creation, you get real returns and you help create a better planet. They're not antithetical. So when I was at Five Oceans, I was at a conference in Barcelona, which is Mobile World Congress, in some of the big technology conferences in the world held every year. And I realized that the technological changes that were taking place were disrupting the planet. We had set up an ESG fund, but the real issue was the mums and dads out there that we were fiduciaries for. This echoes Kirstin's point. You know, we're going to lose their jobs, be disrupted by the changes that took place. And we needed to take the insights that we had as big end of town investors. So whilst I've been very clever as a values investor, we needed to deliver those insights to the population, people, so that they could empower their own lives. So the real impact, so this is sort of like the yin to Kirstin's yang. Unless we actually delivered capability to people to create projects and work out whether they would invest in themselves, that we would fail. And so you see the world, you know, you've got mega cap going up there, but people are disempowered. The world's in trouble. I was involved with the World Economic Forum, wrote a paper about this proposition in 2015. It was incredibly well received globally. We were asked by a few major global entities to do workshops. And so we basically built a new structure, which you're about to see relaunched. And the branding is going to be a very interesting question. Debbie's been remarkable on this thing, but actually giving tools and processes to help people create projects at the same time as allowing investors to invest in those projects locally. So it's localizing. 60 to 70% of the population is currently employed in small businesses in local regional entities. And all the capital you see, Apple shares and FANG going through the roof. Our thing is about getting capital to mums and dads, to people in their regions in order to empower their lives, and in so doing, create better outcomes for their futures. And we think that climate change, all these things will be fixed by that. So that's our mission. We're about to do a relaunch to our brand is currently Nexus Initiative. Watch this space. Thank you, Frost. Thank you, Debbie. There's a lot coming. There's a wall. But there's a wall of stuff coming at us. But the drive is help people, get capital to people. You create this thing, rig ignite people's potential, get capital to them, and then drive outcomes.
Thanks for that very early plug, Chris, as well.
Yeah.
Appreciate
Great,
that.
great summary.
Commercial.
I think one of the things that we're excited about, both of you being together tonight, was that shared passion for people and the focus on the human side of finance. And it's been that's actually driven both of your careers. So it's great to hear a bit more of your backstory.
Thank you. No, I mean, it's all about people. I mean, and actually, you know that happiness is based on, we are not alone. We're socialized creatures. We create each other, and we have responsibilities to understand that and help people in that process.
Kirstin, the word sustainability is huge, obviously even more so today as it should be, and everyone has their own interpretation of it. What does sustainability mean to you?
Yeah, I mean, I think, I don't have a technical definition, but to me, sustainability means that the people who come after us can have the same opportunities that we've had. And that means that we need to, leave an environment that they can exist within, leave a system that they can exist within. And so, thinking about not just what we need in order to be successful in our endeavors today or in the next quarter or the next year, but what will my daughter need to be successful in her endeavors in 30 years' time, and what will her kids need in 60 years' time?
Okay, cool.
Go on, Ben. I was going to say, when both of you went through your introductions, and you didn't really use that word sustainability. You both talked about people or impact or investing or better futures. So just interested in that. So when did sustainability as a word or a concept first come on your radar?
I'm going to say an ultra finance geek responds to that question. And this is as geeky as it gets. So for finance people, for those people who are not finance, this might sound like gobbledygook and I've explained, but I apologize. This is the true answer to that question. I was the first person at BT with one other colleague to get a PC on my desk. That's 1987. And so what you have to understand from that is that you couldn't do finance. As an investor, the idea of financial modeling didn't exist before you could have a PC on your desk.
Wow.
And when you got a PC, so that meant that the investors before that, technologically and information-wise, just looked at back of envelope numbers about whether they should invest in something. In the early 90s, and the reason value investing changed, we started modeling going forward diverse scenarios mathematically, and we could see that companies, rather than just buying a company that was on a PE of 9 below 10, that's cheap, we'd say over time this company is making these returns. And so this company, and I had an argument with my then boss Care about a company, I won't even name the company, but I said, this company is going to create these returns over an extended period. It's worth more. We should buy this. But because he came from a previous generation, it's ironic. It's information and technology that allowed you to understand sustainable returns. And that was where we parted company. And also, then you also understood that these big companies, they're so big, they're actually not just making profits, that sustainable thing over time. If they're polluting their ecosystem, they cannot sustain that profit growth. So the system naturally shows you that companies have to be aware of what they're doing to stakeholders in order to sustain profits, and then they're worth more. So it's actually mathematical. It showed itself through the systems that were revealed by technology. So the answer to the question is, we started doing that from the mid-90s mathematically. Which is a really geeky answer to go.
I guess, and obviously the internet changed everything again for you, I guess.
Yes. What happened was that the information became, in 1987, so actually I got the computer on my desk at the end of 87. We used to have a library, and we would get 10 annual reports for a company and manually input the data to write a spreadsheet. So the thing is, independently downloading information, cross-referencing it, and so forth meant that information and data meant you could start seeing what it meant, the patterns in the company's stakeholders' effects. And that's what's happening. We've now got the information revolution means now that, just as an aside, this is critical. Last year, everyone should be aware of this, that the Business Roundtable, Jamie Dimon, who's the chairman of JP Morgan, came out and said, before this, everyone said companies had to maximize profits in the short term, and that was the sign of good management. Jamie Dimon said, every company management needs to be aware of their broad impact on the world. And the reason he said that is because all the rest of the world is going to know what you're doing to it. You as management, as risk management, cannot not know what you're doing to it. So what used to be, because information is shared, so the internet and information revolution means that management will be held accountable. And the classic example of that, AMP right now, in terms of the thing. So the management can no longer presume that they can sweep it under the carpet and you won't find it out. And the internet and information have made that happen.
Well, actually, it's interesting side. Kerr is our landlord. Interesting connection there.
Say hello from me. We have a long history.
Okay, cool.
I care.
Yeah, he's probably not watching, but maybe he is. Maybe he is. He'll watch the repeats. Debbie, which question should we go on to next? We're gonna number 4.
Number 4, yeah.
I'm scared to say the word sustainability now, but the conversations we're having with companies and brands around sustainability has obviously grown massively since the fires. There were conversations over the years prior to that, of course, and we as a business continually try to push our clients and advise them and influence change in terms of reducing materials and trying to do the right thing as much as we know. We're all learning as we go. How have discussions around sustainability changed over the years for you, Kirstin?
I mean, I think the thing that is noticeable to me is how many more voices there are in the conversation about sustainability. And I think that's a really positive change. But it's also a bit of a challenging time, I think, for those of us who are leading the charge and for those of us who think about sustainability in that long-term sense, rather than just kind of, everyone else is talking about it, so we have to have a point of view on it as well. Because I think what we're seeing in superannuation, in finance more broadly, I mean, in gas, electricity, in mining companies, is just this kind of greenwashing of the brands. And that's obviously being driven by the fact that more consumers are asking questions, regulators are asking questions, Institute of Company Directors is asking questions, and businesses are responding through their marketing messages, but those messages aren't being translated into action. So I think what the challenge is for those of us who are in impact investing, who are in B Corp companies, who are, trying to think not just about how can our actions leave a positive impact through our business, but also how can we influence the broader business community to be more ethical and more sustainable as well, is how can we demonstrate that sustainability is more than just changing your logo to green. It's more than just putting pictures of solar panels on your Facebook ads. It's who you are every day, and it's how you treat your consumers, your employees, your members, your shareholders, as well as others who don't buy your product. I think thinking about sustainability, not just in terms of how sustainable are you if it will get you money, but how sustainable are you when the doors are closed, is a really important challenge.
Really good point. Now, you mentioned B Corp. We're currently applying for B Corp status now, and they've been a great help to help us to identify the areas in which we can become more sustainable, across our whole operations, our policies even. But who else is out there leading the way, showing the way in terms of sustainability for companies, people, or brands? Who's leading the way?
In terms of companies or in terms of organizations?
And that's to the audience too. I know Debbie posted just now in the chat there. So please feel free to put names up there who you think are leading the way too. Sorry, Chris.
No. I mean, the reality is, clearly at a marketing level, it is understood that shift has to take place. There is the irony of this is that the companies that this is interesting technically, the companies that were most cognizant of the shift, that in my experience, this is going to sound bizarre, was people in the insurance industry. And the reason why I'd say that is because they could already see mathematically through their actuarial tables, that's something really geeky here, that climate risk was changing the risk tables. So what has started happening, anybody who's aware of risk, and so within business management, in traditional corporate structures, sustainability and risk management are overlapping concepts, and risk management is a good business practice. So you'll see that at the big end of town, so those companies and that's what the Jamie Dimon comment is making, is referencing, but they've got to talk about it because of risk management. What then, to Kirstin's point, that means operationally and how they run is challenging, because actually what you've got is, any organization that is more than 3 steps away from its stakeholder starts developing sociopathic tendencies. That is, the internal rules of the organization are more important than the stakeholder, which means so they can work, if the internal rule is risk management, then they start moving because it actually economically means something. We need to get this revolution really working. We need distributed, localized. So the real thing is, there are a lot of people that have started working at that level, but because the majority of the population and stuff is localized, there's something yet big to come, and we've got to all work together to make it happen.
Yeah, I think that's a really great point about who are the stakeholders, because when it comes to, how deep does your ethics go? Is it just greenwashing, or is it something that actually is core to who you are? Who's going to be the judge of that is important to asking the question. So the way we approach it is we think about our stakeholders as kind of like a, concentric circle, where at the smallest we've got our staff. And so what are we doing in the way we treat our staff to role model the type of economic system that we believe should be possible? For our members, what are we doing to help them build a prosperous future free from climate change and inequality? Stepping out from there, the companies that we invest in or don't invest in, what are we doing to be a good investor and to use our investor power and how we vote in elections to influence those companies towards more ethical business practices? And then within the broader community, what are we doing to influence business more generally or consumer sentiment? And so when COVID happened, we applied that framework to thinking about how do we respond as a business. And what that led to is a series of actions across that stakeholder landscape, where for our staff, we introduced a bonus day of leave a month because no one was taking holidays because they were in lockdown. We supported our staff in the transition to working from home. We actually shortened working hours and kept pays the same to allow our staff to adapt to the new working environment. For our members, those of you who are superannuation followers will know that the government decided to tap into superannuation instead of supporting our community through a public health crisis. We sort of felt this disjunction where, as a business, we were receiving government handouts, but here were our members having to tap into their life savings in order to get through the crisis. So we made the decision back in April to pay forward the stimulus that we were receiving as a business into the accounts of our members who are accessing their superannuation early. Now, it didn't replace what they took out, but it was something that we could materially do to say, we see you and we want to help in a way that we can. Stepping out again as an investor, we signed up to the UNPRI COVID response investor statement. And we reached out to companies that we invest in to make sure that they weren't receiving stimulus money, which was being used to pay bonuses to executives while redundancies were happening at the front line. And then sort of within the business community, we've been sharing these lessons, talking loudly about not using superannuation to support the community in public health crisis. And so I think it's really helpful for us to think about who's going to be the judge of whether or not our actions match our words, and making sure that we line up the actions behind those different groups.
I think that's really, I just want to pick up, Kirstin's pick up my point. It's really important, and I hadn't focused, especially as it's become clear in what you're saying. Stop thinking about sustainability as excuse the cliche, but as a trendy dinner party topic. Actually talk about, what are you doing? What does it mean to the people you're working with as a community? We are all that 3 degrees of separation. You know, how are you all impacting each other's lives over time so the future is better? That's all it's about. Get real about how you're working with your stakeholders and what it means to people. And then you can have a real sustainability conversation.
Yeah, great. It's as a future super member, it does make me feel very proud to be part of that organisation. It's great to see how an organisation really is living to and demonstrating its purpose every day from within and everything it does. So it is it comes back to those metrics, and you talk about it's who decides who is the decision maker, whether you're actually sustainable or not. And there aren't many metrics out there for organisations. It's really hard for us to determine whether an organisation is acting responsibly or being sustainable. So what measures are there that can help us make choices to work with sustainable brands and organisations?
I was just today. I was with somebody with one of the impact measurement systems. There are a number of different methodologies and frameworks being used, and I was with somebody representing one of these methodologies in Australia today. And the interesting thing is, the moment you create a standardized measure, you create something simple and easy, but you also create a risk because the measure, and we've seen this, the moment, it's like the problem of GDP or finance. The moment you create a measure, people optimize against the measure. And the reality is, what you need is both. You need transparency about data, and we're using a number of measures, but you also need to get the organization or the leader to indicate their vision and their understanding of what they're trying to achieve on a personal level of values and mission. And so then you reconcile. It's like a counterfactual. You reconcile on one level, this is the objective and the evidence of what you're doing to commit to the objective. And then you could start talking about a range of measures as cross-checks around them. The moment you try to rely just narrowly, I mean, we're looking at a range of measure structures right now, and we're building a measurement engine. But you recognize that the measurement engine is not the solution. It's the counterface to the individual stakeholders' vision and mission about how they're making a difference. And you use the measures to support that and give transparency to external people. People have their own versions, and people can then choose for themselves what matters to them as investors, as stakeholders. So we want to give people access to data across a range of measures, allow leaders in their businesses to enunciate their vision, and allow investors to say, this is what matters to me. And then, rather than the big centralized sausage factory with a standard measure and etc. That's why we got into this mess in the first place.
Yeah, I totally agree. I think there are a lot of challenges in getting a single measure or a single metric when it comes to sustainability, but the first step is definitely transparency. And so, you know, using a superannuation example, because it's what I know best, there's not even a requirement for superannuation funds to disclose to their members what they invest their money in. So you see a lot of super funds who talk about their impact investing or the fact that they hold renewables assets, but that will be, you know, in one case, it's 0.03% of the portfolio and 30% of the portfolio is in fossil fuels. So they're talking a big game about the work that they're doing over here. And isn't this amazing? We're investing in solar farms. But, you know, by many factors higher, they're investing in propping up the fossil fuel industry, which is, you know, far and away outweighing the positive impact from the positive impact work that they're doing. So I think for consumers, being empowered not just to see the marketing message or the advertising, but to actually ask what sits behind that. You know, if you're seeing someone advertising on their investment into renewables, ask the question about what is the ratio of their investment in renewables to coal or renewables to fossil fuel. And I think the more people start asking those kind of questions and expecting more from the managers of their money, the more quickly we're going to see a change happen.
There's another thing which is technical and it's profoundly important. If not, I argue I'm prone to superlatives, but I think this is the most important piece of information I can impart on you. And that is, and look into it, what's termed the single purpose test. And the single purpose test basically says that superannuation funds or investors are only allowed to look at financial returns and short, and what that means. And all these other factors should not be considered. So that means that the consumer gets information that they get a 5% return or a 6% return, and they might get information traditionally on the volatility characteristics around that return. And that's traditional narrow finance. What you're invested in is you get a bit of information, to Kirstin's point, but actually the trustees are only allowed in this narrow reading of the law to talk about the return level and give you statistically derivable volatility characteristics, et cetera, et cetera. Watch this. And I was talking to one of the managing director of one of the local subsidiary or the regional subsidiary of one of the biggest investors in the world. He's personally responsible for $1 trillion. Wow. About this topic. And what's missed in this topic, and this is fundamental, that when you invest, and Kirstin has implied it, when you invest in super, you don't just get a return. So if you invest and you get a 5% return and it's invested in Apple shares, BHP shares, or if you invest and you get a 5% return and it's invested in a very efficient local hospital and so forth, you don't get that information. The super trustees don't realize that you as a local citizen, when you invest in the super fund that invests in the local assets, that gives you the same 5% return as someone who buys Apple shares, you actually get both sides of the ledger, both sides of the equal sign. You get 5% return and you get a local hospital. And in the past, they treated that as fallacious. You don't show that information. So what I'd really say is I'd flip your question. Not just what you get in terms of measures for impact, what you're not being shown about the impact of what you're investing in now. You know, you could be investing and get the same return, but be investing in something that is building your local community. And you're not shown that right now.
Kirstin, what do you think is getting in the way of more brands designing with sustainability in mind? And what are the biggest challenges, do you think?
I mean, I think a lot of people get trapped by the status quo, and what's the received wisdom that we've all been taught in our earlier jobs. And, you know, we see this a lot in superannuation. As Chris said, the sole purpose test is often weaponized as a reason to ignore ethical considerations rather than to think about what is an outcome to a member that you're providing in their retirement more broadly. But I see this in a lot of places as well, when you're talking about gender pay gaps, when you're talking about diversity on boards. You know, there's a lot of hand wringing and we wish it would be better, but it's not. And the pace of change is so slow. Well, why is that the case? And, you know, if you're a leader within a company or a leader within a team or an employer within a company, I think there's a real lack of vision that a lot of people have around what could the world look like. And once you have that view of what could the world look like, you can start to think about, well, what are my gaps today and how can I start making a difference within the scope that I have? So I think that's an incredibly powerful tool, is not accepting the system as it is and instead asking what could the system look like, and then just taking every one of those small opportunities to try and work in that direction. And what you find is over time, those small opportunities do add up. And when you have someone who's willing to stand up, it doesn't matter how junior you are within a company or, you know, where you sit in the hierarchy of the brand. If you're willing to speak up and say, but is this the best that we could do? Like, if we had no other limitations, what would we do with this business, with this decision? And then see how close you can get within the limitations you have. I think we'd all be heading in a much more positive direction.
Wonderful.
Sounds like we all need to get better at asking questions and asking why the status quo is the status quo. Agitating.
I think we've gotten cynical. I think we've become disempowered. And one of the biggest things to be achieved is actually to people think that actually you can make a difference. Don't surrender. The biggest thing is step up, ask, act. If you don't, no one else is going to do it.
Mm-hmm.
Yeah, and the cool thing is when you start doing it, you get to see how much can happen. You get the reward of getting to do it, and all of a sudden it's pretty addictive, and you become a bit of a change maker. But on the flip side, if you push for change within your organization and you get met with resistance, well, I think that tells you an important lesson about the person you're working with or the people you're working for as well.
Yeah.
And what would you do and recommend you do in that situation?
I mean, I've very much, I've been an agitator within sort of, very big corporate systems and been able to make progressive change. I think for me, what's important is having the vision, but also being, being a little bit practical around taking steps in the right direction. And in some corporations, change happens very slowly. I now have the very great privilege of leading an organization, and I can control the pace of change a little bit more, so I can push for things to happen a bit more quickly. But I think, even within the big companies that I've worked in before, being willing to ask the question makes it easier for the next person to ask a question, and you do get that sort of snowball effect. And it might not change right away, but over my time within Bain, for example, I was part of the first ever client-facing job share partner at my level. So previously there'd been job share pairs on the support side, but there was this view that you can't be client-facing, you can't serve clients in a job share arrangement. But myself and my job share partner just happened to be at the same time in a small female cohort in one of the smaller offices. And losing both of us would have been very bad for their gender balance within the team. And so we were given the right to try. And it turns out that clients loved getting two brands for the price of one. It was a great deal for the clients and a great deal for us. And so, by asking the question, being willing to be the guinea pig and try it out, I think we were able to make a lot of change within the way women in particular returning to work after having children were able to get flexible work.
It's great. Two great catch cries from both of you there. Don't surrender and push for the right to try. Great tips.
We literally have a cat in the audience there as well. In the background.
Go cat.
Yeah, she knows she's the center of attention.
Now, obviously, we're a branding agency, and this webinar series has been about brands and their role in sustainability. Thinking about, you're both co-founders of amazing organizations. What role has brand played in your sustainability journey? I'll give it to Chris first.
Well, we're about to rebrand. I think so the interesting point here is, and we've been interviewing a range of companies and enterprises in the social space and so forth. And what is absolutely telling and profoundly significant is two overlapping propositions. Proposition one is no one trusts the banker. It's fundamental. So even if you're trying to help and you're bringing in finance expertise on their side, the immediate thing is distrust. And so from a branding point of view, it speaks to something really fundamental about people's relationship with money. And one of the propositions I'm saying is put values back into money. At the moment, money is without value in a lot of people, and distrust. So in a branding terms, that's really profound. The second point I want to make is there are areas of comprehension gaps, blind sides that we know people have about complexity. So, and this is cognitive function, and this is about communication as much as brand. And we know things that people their brains don't get statistics, they don't get quantum mechanics, and they don't get finance. And so as a result, to get people to have a relationship, it's not just they don't trust banks, they don't understand fundamentally money and finance. And so information about how you communicate and get people comfortable with the empowerment about resources and money and finance and allow people back into that space, which is so fundamental to their identities, is one of our fundamental challenges. And it speaks to what Kirstin has said about people feeling alienated and disempowered and so forth. And they're disempowered even from their own money and from their own ability to make choices with that. And so brand, to actually move from the banker bad guy box to the it's your money and you should understand how it works and what you can do with it box to make a difference in your own life and that of your community, is a huge task. And we're all still working on it, because the dead wood, the negativity in the space is fundamental.
Yeah, I totally agree. It's something that we have, I guess, struggled with is the wrong phrase, grappled with, is how do you make superannuation sexy? How do you make superannuation something that, you know, a person in their 20s or 30s is going to not only be comfortable engaging with themselves, but comfortable talking to other people about, you know, outside of a finance setting. My understanding of the role of a brand has changed so much in the last 3 years. I think I used to have a very narrow understanding where, you know, a brand was a logo and a set of design principles. But what's become really clear to me over the journey that we've been on at Future Super is that a brand is obviously a lot more than that. It's what you say, what you look like, and what you do. It's the space that you occupy in people's minds. And I think we really think about our brand quite holistically, and the role of our brand is telling stories to engage people with their money and to empower them to use the power of their money to create the world that they want to see. And that's a super exciting thing to get to do through a brand. And so we've been on this big journey of rebranding kind of in a real test and learn way at Future Super, where we started out with what are the stories that we want to tell about money, and then started playing with visual tools and identities that to try and connect with that. So testing messages and identities at the same time. I mean, it's fascinating to look back through our Facebook advertising history and see some of the really weird things that we've tested over the last sort of 18 months or so. But the more we've tested, the more we've learned, the more we've been able to effectively engage with people through advertising, through visuals, and through the brand in a way that allows them to take control of their own power of their money. So, yeah, it's a fascinating journey. My chief marketing officer has actually just had an article published in CMO magazine about her lessons in building a powerful brand. So, cool. Shoot that through and put it in the show notes.
Yeah, that'd be great.
Cool. That'd be great. Which question are we on to next, Deb?
Question 8, Vince.
Is that yeah, I guess we kind of we've touched on it so much, I think, over the conversations, but it's pretty obvious. Why do you think sustainability is such a big focus for us now? I mean, obviously, it's like
because we're fucked.
Yes, thank you, Chris. Yes, we certainly are.
The 2020 answer.
Yeah, it's the Joe Biden answer.
Yeah. How horrific was that yesterday? Or was it yesterday? Tuesday? Wednesday? Yeah. Do you want to answer that? Or are we, is it we fucked? Is that the answer?
Because COVID, I put it this way, the simple, short answer is the bushfires you flagged at the beginning of this conversation, followed by Australia. Australia was in a fortuitous thing. I think the bushfires are why we did so well in COVID, because the government, fluffed the bushfires and understood that the responsibility when COVID hit meant that we got a reaction where we got a 180-degree turn very suddenly from aping Trump to something very different. But so COVID was a shock, but not a surprise, I think, to the system. Everyone knew something was going to happen. And when it happened, and so now you see impact is endemic. And so what you've now got, so I had people, single purpose test, what you've got, this is quite amazing. I was speaking to one of my former bosses, who's the chair of one of the major industry funds in Australia, who didn't believe in impact 18 months ago. and extraordinary. And now you had Donald Trump challenge ESG. He was trying to do a single purpose test to the US pension system, which is termed the 401k plan system through the Department of Commerce, saying that they should not look at any ESG factor. And you got the heads of the big fund management organizations in America say ESG is a cofactor to performance. 12 months ago, you would have never seen that. So the shift, because but people knew that it was coming. So it was like the GFC. I don't think they suddenly discovered it. They knew behind that there was a problem, but they didn't know what the tipping point, and the tipping point has been triggered.
I think as well, I definitely think 2020 has brought it into sharp contrast between the fires, the floods, and the plague. But the other thing that's been super interesting, I keep saying super, but anyway, it's been very interesting, is that what we're really seeing, like over the long term, there's been report after report which shows that funds and managers that have a strong ESG screen to their investing activity outperform the benchmark in the long term. That is known, but it's not particularly exciting. But what has been really clear in the last 6 months is that funds with a strong ESG screen are outperforming right now. It's not just in the long term. And the ethics is a core part of that as well, because in our portfolio, we don't invest in fossil fuels or service providers to the fossil fuels, which includes the big four banks. And so as fossil fuel, export prices have been plummeting and the banks have been in a volatile time, our members have been shielded from that volatility. We also don't invest in alcohol, tobacco, gaming. When you're in lockdown, there's no casinos operating. And so, again, our members have been shielded from those losses. We don't invest in the airline industry because it's such a high polluting industry. With global travel at a zero, that industry has taken a plunge as well. So all of a sudden, front and center, you've got ethical considerations that are delivering protection on the downside and increased performance on the upside. To the extent that, pretty much since March, I don't have all of the numbers to hand, but if you look at the performance of super funds across that period, ethical funds and ethical investment options within other funds have been generally at the top of that list. And for Future Super, we had the amazing experience as at the end of financial year of being number 1, 2, and 3 for our investment options.
Wow.
Out of 220 that Super Ratings surveys for balanced options. So, we're all of a sudden getting these really, really tangible right now examples of how sustainability or lack of sustainability is punishing investors who aren't taking sustainable, ethical, social factors into consideration and rewarding those who do. So it's been a great time to be an investor within a sustainable fund. I'm sure there's lots of people having great conversations about how I told you so to their friends and family.
So Morgan Stanley came out and noted that sustainability, and this is just a loose statistic, sustainability factors recently have outperformed by about 20% as a general statement. I know that, I was running Five Oceans during the GFC. We were doing we had similar great performance, in part because the GFC was actually a sustainability failure. And what it was that banks, what you got was rabid lending in the United States to people who couldn't afford to pay back their loans using a structure with a non-sustainable lending pattern. And and we didn't invest in those, and we got the GFC right, because if you knew the GFC was the product of an economy that had moved outside of equilibrium and was using non-sustainable practices to sustain activity, which was lending to people. I'm a bit worried about when you look at current policy and what they're talking about lending to people who can't afford to pay back is not a sustainable structure. So sustainability is not just about green, it's about business models which are about easy short-term hits but not doing the real work. Sustainability is not a cop-out, it's a step up to the real work about creating value. And over time, that is the low-risk, high-return option, even though people try to fudge it in the short term. And people are getting that right now. It's been demonstrated in the crisis, the downside. And the outperformance you get from not owning someone who's fudging their numbers, it's very interesting. I learned this through CARE in part, is that managements, when they've used up all the low-hanging fruit, start having a risk of taking dodgy practices. So it's a tide. That idea of profit maximization for big companies that have actually already done all the heavy lifting, they tend to take risky routes. You should be avoiding those companies. They start damaging stakeholders in the world, and avoiding those gives you great returns.
Well, I'm certainly shifting my super tomorrow to future super. That's it. Where do I sign?
Very simple online process.
Okay, cool.
That's great. You both talked about how your organizations play a role in empowering people to demonstrate that there is an alternative, there is another way, and also they can take action through your brand and what you offer. What if your organization, if your brand didn't exist, what do you think would be missing from the world?
Oof. I mean, for us, we've only been around for 6 years at Future Super, and I think in the time that we've been around, I've seen a big shift in the kind of willingness of some of the major funds to talk about ESG factors. And to use their voice as an investor on behalf of members to influence what's happening within the companies that they're investing in. I think that's a really positive change within the superannuation system overall, because the nature of the sole purpose test and having to invest in a way that delivers outcomes for our members means that as investors we should be acting with those members' outcomes in mind as well. So I think that's changed a lot. One of the really cool things that we did last year was actually a little bit over a year ago now, back when we were able to protest in person, was we led a coalition of businesses called Not Business as Usual, which was in support of the school student strike for climate. And as part of that, it came from, again, a question from our own staff around, can we, take a couple of hours off, go along to the strike, support the students? But we turned that into, well, we're going to close down the whole business for the day. And not only that, we're going to encourage other business leaders to do the same. And we ended up with around 3,000 businesses signing on to, in various degrees, from closing down their business for the whole day through to allowing their staff to take a long lunch and not have to take leave or get permission to leave. 3,000 businesses who committed to allow their staff to attend the school student strike for climate without retribution. And, as a result of that, around 150,000 extra people in Australia were able to participate in those climate strikes. It was one of the biggest protests that's ever sort of happened in support of climate. And I think that as well has really catalysed a change in the conversation among the businesses who participated in the broader business community, which is to sort of say, like, when it comes to sustainability, business in Australia is often used as an excuse for inaction. But as business leaders, we care about sustainability because we are also members of the community, and we care about sustainability because we plan to be in business for a long time. And that means we need an economic system that's stable and doesn't get thrown into disarray because of catastrophic bushfires every couple of years. And so I think it has sort of led to this change in businesses and business leaders being more willing to use their voice to speak on climate-related issues. And I'm really hopeful that continues.
Yeah.
I must say something. I think we've barely started, and I think the work that needs to be done is drastic, radical, and urgent. So the super system, the way it works, is hugely biased to traditional large traditional assets, listed equity, listed bonds, and so forth. The reality is 60 to 70. So if you look at the share market boom versus the human experience, something's not adding up. Something's not adding up, and the planet is dying. 60 to 70% of people are working in businesses that cannot get that capital. They are disempowered, and they are giving up on responsibility and so forth. So our ability, if we didn't exist, we haven't done it yet, but the work that needs to be done is to get the belief that not just capital, but capability down to smaller, regional, localized entities that make differences in people's lives and people believe. And this is a background of development economics and so forth. The big thing is disempowerment, absence of capital. if we want to make the shifts that need to happen in the world, we need to empower people and get them access to their own capital and their own capability and incentive. And that's what we're here to do. And very few people doing it. We've got a system to do it. I want to talk about climate here. So let's use an analogy. We have an expectation. There's a lot of evidence to suggest we're in accelerating climate change right now. You know, dates are put out there, but the irreversible date, one version is 2024. If we don't reverse the stuff that's happening on the planet by 2024, it's irreversible. So the next generation, let alone ourselves, are in trouble. If you look at the cycle time that it takes, I'm going to use this as an analogy, to build a dam takes 5 years to plan design, let's say, and $50 billion. We don't have 5 years. To build a water tank next to a premises is $50,000 and 5 months cycle time. So if we can shift capability and capital to everyone being able to make little steps, we can change things. The center has failed and we've got no time. And that's what we're here to do.
I just wonder if we could interject with Maria's question here, because it seems kind of poignant for what you just said, is the growth model unsustainable? Oh, just went somewhere, hold on. The world, almost every business seems to be based on growth. Is growth unsustainable? Kirstin.
All right, so, okay.
Kirstin.
No, Kirstin, I talk too much.
Let's share the love.
Yeah, I mean, look, I think there's a lot of more economic arguments to this than what I'm going to present, but absolutely, I think it's unsustainable. I think the planet can't sustain it. We're seeing that in terms of the effects on the planet today. I think returns over a long term and investment over a long term can be sustainable, but I think returns at the level that a lot of investors seek are not sustainable. And you see that with the volatility that they deliver. And, you know, like a lot of investors who are trying to chase returns end up barely even beating the benchmark because their wins kind of outweigh their losses, kind of thing. But yeah, like absolutely, I think the economic system needs to adjust, and the tremendous returns that have been seen over the last sort of 5, 10, 15, 20 years have been at the expense of people and the planet. And you can see that in the environmental impact, and you can see that in the gap between what the top 1% is being paid and what the bulk of the population is being paid. And those two factors, I think, are not sustainable. And growth is resting on those factors.
Growth, as was measured in the 20th century, was about the industrial revolution and the production of objects. That equal growth. And then as that stalled, and I will go, that's backstory, we started printing money to inflate financial assets. So the two drivers of growth. The reason why interest rates are zero in the world today is actually the old model has failed. And so they're trying to inflate old assets. So they're giving financial returns on dying zombie assets by printing money. But at the same time, we have depression, unhappiness, a number of measures. So when you say, are we living at, so growth has failed. We maximize growth, but we're below human potential. So I would put it differently. I would say that value is created by meeting needs, and the greatest value is in life fully expressed. And we are all, most people, other than the 1%, 99% is telling us most people are not living fully expressed lives. So if you measure value in the old financialized terms and physical objects, that model is dead and is killing the planet. If you're saying we cannot improve things and grow human experience, that's false. Actually, there is huge work and massive opportunity. So I'd be an optimist about the growth in human potential, because we're barely such. We need to unlock that. We've milked and overused scale and production of objects. So that's a lie when people say growth is over. The growth of the human experience has been held back, and we're here to unlock it.
Yeah. Wow. That is gold. Do we read out Richard's, Rich Curtis? Hey, Rich. He says, hello back. Question. APRA seems to be pushing the super sector towards fewer, larger funds. If that's true, where do you think ESG will fit in the context of that convergence a key driver or a missed opportunity?
Yeah, look, it's a great question, and certainly we're seeing a lot of pressure from the regulator towards mergers, towards consolidation within the industry. But I think there's a real opportunity here. I think at the moment, APRA hasn't really had a lot of focus on what it means to be sustainable and what it means to apply a sustainability lens to investing. We see part of our role as changing that conversation. So just to give a bit of an example, we have published an impact report for the last 2 years, which looks at the combined impact across our whole investment portfolio. And we've engaged in a dialogue with APRA about that, where, you know, they've looked into the methodology basically to try and get comfortable with the way we've gone about measuring our impact, with an understanding that the industry is going to head in this direction. Impact measurement and reporting there's pressure from consumers, there's pressure from corporate governance bodies. You know, this is going to be something that's going to have to happen. And they want to make sure that they want to get comfortable with the way it works, so that when it rolls out on a large scale, they're ready to work with funds and investors to roll it out. So I do think that there is pressure around ESG and measurement. I would love to see the approach changed, where instead of having to explain why you're taking ESG into consideration and how that fits with the sole purpose, you have to explain why you don't take ESG into consideration. And I think there's lots of conversations happening at different levels within law and regulation, which, you know, they're converging, and I think the conversation around ESG is going to continue. And consumer pressure within superannuation is huge as well. We've seen over the last kind of 6 months or so, Market Forces has been running a massive campaign targeting UniSuper specifically, where, you know, a lot of their members are academics who are working in climate change or working at the forefront of this research. And their enterprise bargaining agreement locks them into UniSuper, and they get, you know, benefits towards their super for staying there. And yet UniSuper has been a very large investor in fossil fuels and has repeatedly sort of resisted urges to move away from that. Off the back of that consumer pressure, they've made some really positive statements in the last couple of weeks about their intention to transition away from fossil fuels and to bring more of a focus on moving towards net carbon zero across the portfolio. So I think the conversation is happening. You can't turn it off, and it's going to get more and more urgent, as Chris said, as we get towards these deadlines, where if we don't make large-scale change, then we're fucked, and the next generation is fucked. So I think
that's not funny, but yeah.
Change is happening, not fast enough, but it is happening. No. And the more of us who speak in favour of it, and the more of us who ask these questions, I think the more likely it is to happen in time.
The big industry funds, so we're connected to a number of them. You can look into some of the people in our staff and see some of the boards they sit on, and you'll understand that. And a number of my ex-colleagues at BT are senior in all these organisations, so we're in these conversations. I think the interesting thing is we've crossed the Rubicon, you know, about ESG with those virtually all the big industry funds now. The issue is more, given what I'm saying, is how they participate. They're trying to work out how to do it now. So because of the scale problem, they are so big and they don't know how to get into the problem, and they are exploring it. You know, watch that space. And that's one of the things that we're working to. The second thing is, I think you'll get a barbell. You'll get the big, it's not just the big funds are trying to, they now know, and if they don't do it, they'll be, the government also knows. The government is looking for a way, you know, affordable housing, classic example. There are a number of big thematics that the big industry funds understand for a collection of reasons. They're investors, regulation, this to that. There are a collection of elements. They're going there. And then there are thought leaders, things like Future Super and so forth. I don't think it's this is going to wipe out that. It's the process is quite dynamic right now.
I mean, we very much see our role as sort of being the test ground to make it safe for the big funds. So, you know, previously the received wisdom in Australia, the status quo was that you can't have a balanced portfolio that delivers returns to members over the long term without investing in coal in Australia. It's just not possible. Well, in 6 years we've proved that you can do that. And that's a real privilege that we have being a small fund, is we can apply very, very strict ethical criteria and follow them because we're small enough to do that. It is much more of a challenge to convert a $50 billion or $100 billion or $130 billion portfolio to a fossil fuel free model. But again, I think that's where that vision comes in. And why can't we do this? What does good look like, and what does it take for us to start moving in that direction now?
I could talk for about half an hour on this topic. This thing. There's some technical points. Let's move on if you want to, but it's a big topic. It gets very technical, but the change is coming.
That's great. Thanks both. Thanks, Maria and Rich. Great questions. Keep them coming, everyone. On the topic of universities, their business model relies on funding research, and therefore a lot of the great research that is done has been funded by business and those entities. Do you think that there is a lack of quality research in environmental research, for example, because of that?
Where to start on this question? The university system has huge problems it's facing. I don't know where to start. I'm on one academic board, and the catch-22 is this, and there are a few catch-22, there's more than one catch-22. But one is government funding was cut, and so they relied on foreign students. So that's problem one. Problem two is Australian companies tend to be very low, you may be aware, on R&D. The universities are trying to become more business oriented in order, and I've been involved in these discussions, in order to focus their research and training, both research programs and training of students. The problem is that if Australian companies are lagging and not R&D focused, and the universities, in order to survive, have to give jobs and training to companies that are lagging, our universities will lag globally. To actually step ahead of the curve, they've got to be looking at global trends, not local provision to companies that are not spending on R&D. So the key area of exception in Australia is health. So the universities are doing a pretty good job in medical research and so forth. But in other areas where you think the problem is that unless you have an industry sector, the government used to have the CSIRO as the outlier to counterbalance the fact that we were largely an extraction economy. And so our business look at the R&D levels by global standards in Australia. Australian business is lagging because of the mix of Australian businesses. So if you say the universities must echo businesses in sectors with low R&D, the universities, unless you've got a counterbalancing force, they have a huge problem, and you've seen it manifest. But we can't be good at everything. But there are some areas which we're very good at. So I don't want to dismiss that. But this thing about that, so it's a curate's egg. And the universities are aware. I think COVID, the big question here is the loss of foreign students, which is huge, is going to shake things up.
Let's think about Kirstin's comment about being the testing ground for larger organisations, and it's up to organisations like both of yours to prove that there isn't the quality of data available or research available. So you actually have to go out and demonstrate it first.
Yes.
Yeah, I mean, I think there is data and research as well, and people choose to ignore it.
Right.
I mean, when it comes to climate change, there's no shortage of data, there's no shortage of research, but it's easier to do nothing than it is to face the inevitable and do something. I think similarly, when it comes to ethical, sustainable investing, you can run a benchmark analysis on an ethical portfolio and see how that would have performed relative to your sort of non-ethical screen portfolio. So, I think part of being the one who's willing to take the first step is also, breaking other parties out of that comfort of being able to say, well, yes, this is a good idea, but it can't be done in practice. So
I think the swing will be really fast because the universities are needing to shift, and they will shift. And I think the finance curriculum will shift rapidly.
Yeah, I think so too. Yeah.
Because of what you said, Kirstin, they'll shift.
Mm. I guess we saw the shift because we work with a lot of university brands on their brands, and we've seen that too. The emphasis on attracting, more students from around the world, and now the situation is like, how do they fill the space? We've got to move towards wrapping this up. What are real outtakes that we want from this, and there's loads of them, and we'll spend some time and kind of unpack those and share those with you at a later date. But what tips would you give to everyone listening in if they want to start taking positive action on sustainability? I know that's a big question, but we make it as simple as possible. Your takeaways, right?
Yeah, I think for me it's the point that I raised earlier, which is like we should all be empowered to imagine that the world we want to live in and the world we want to see, and that applies just as much to outside of work as within work. And I think if you take that step of thinking about what is the world you want to see, what is the company you want to work for in the long term, and start taking positive steps towards shaping that world for yourself, then one, it feels great, and two, you start to see progress, and then three, other people join you.
Yeah, I agree completely. I think the first point is it's frightening out there. You've got to keep your smile, step up. No one else is going to do it for you. You know that the centers fail, but if you step up and work, we have to work together. We have to create brands about working together. No one can do it alone, but we can do it together. And if we step up, it happens. And so I'm in complete agreement. And I think the zeitgeist has shifted. The drama is so big. We haven't got much time, but people have got it. So, actually there's a change theory thing about this, which is going backwards is more dangerous than aggressively going forwards right now. We've crossed that Rubicon. So actually you are every reward to step up right now, because the alternative is more frightening, and that's when change happens. But I want to say something about your university clients. The key insight for the universities is this, and they're just beginning to get it, that they are embedded in local communities, and they lost that. And they can create local development frameworks with students working with local communities and embedding. And that's the reorientation of because even the teaching model can go online. And that's speaking to the same thematic. Get human, get human, get to work, and get impassioned, find purpose, go. And we'll do it together.
And get local.
Get local, where it matters, where you can see line of sight. Stop trying to change everything. Stop working dinner parties. Work in line of sight.
So you both you and your organisations are truly inspiring and leading the way. So thank you both very much. You've left us and everyone involved tonight with some great tips for the future and a real sense of optimism about what we can do and the action we can take on sustainability. So thanks both.
Great pleasure.
Thank you.
Yeah, absolutely. Thank you all, and thank you everybody for listening in tonight. It was amazing, especially Chris and Kirstin. Very inspiring, and a big thank you also to Debbie, who co-hosted this with me. It's been a great 3-part series, and so we're looking forward to announcing the next Defrost 61, which is coming up in a few weeks' time. So stay tuned. We don't know what it is yet, but we're busily designing a new one. And if you aren't on our mailing list, please head over to Defrost website and sign up to get on the Defrost news. We're doing this on a monthly basis, and it's a lot of amazing people like our guest tonight, really being very generous with their time and sharing this wonderful insights of what they're doing. Equally, I do a podcast called Design Your Life, so designlife.com.au. And the series we're doing right now is around people designing and making local, and that's been really a really wonderful insight as well. So have a listen to those as well. But thank you all again. It's been a lovely evening, and we look forward to sharing the replay with you guys very shortly. So thank you.
Bon appetit.
Thanks, everyone. Bye.
Yeah.
Enjoy.
Thanks,
Bye.
Good night.
Bye.